Now, these two REITs have seen a big jump in DPU, dividends per unit. The first, Mapletree Commercial TRUST, 57.9% jump. Second, Suntec REIT, 16.2% jump in DPU. These numbers look fantastic, correct? In this tutorial, I'll be sharing with you latest figures because they've released newest earnings as of April 2021. I'll show you whether these numbers are sustainable, whether this jump is sustainable. But before I get there, let me ask you this question also. Are you worried as a REIT investor of seeing such news? Businesses in Novena area being impacted by TTSH COVID-19 cluster. Velocity is the one in the screenshot right now. It's owned by UOL. It's not any of the two REITs, but nonetheless, if COVID-19 starts to run rampant again, then any shopping mall would naturally see a negative impact in terms of sales, correct? So my suggestion is, if you are a REIT investor, look really long term. This is part of a recovery phase. So if you understand, these kind of hiccups might happen, you're able to look long term, then investing in REIT is actually pretty attractive in a lot of ways right now. If this topic interests you, continue watching on. Hi guys, welcome back. Now let's start off firstly with Mapletree Commercial TRUST, who owns Vivocity. If we look at the latest numbers, you realize that DPU has grown from 3.37 cents to 5.32 cents, which is a 57.9% increment. Wow, that looks fantastic, correct? But if you look at the footprint, you realize that a lot of which is actually capital allowances and retained capital distribution from last year because of the pandemic. And now they are releasing back that money back to shareholders. So it's actually not operational performance jump. It's really withheld monies now being released to shareholders. So the thing that we should really zoom in on is really on operational performance. And the first thing I'd like to highlight to you is this over here. You realize that net property income has inched up slightly. That's a positive. There's more impact from net government grant. But overall net property income has increased, which is something important. Net finance cost on the other hand has dropped significantly, a drop of 14.8%. Now, property owners have all been refinancing, including REITs. So this has actually saved some finance costs. So if you're a REIT investor right now, interest rate is looking low. Naturally, it's a boost because net finance cost lower means that there's more to distribute in terms of units wise. So while this DPU growth is not sustainable, let me show you a few key parts that I think is pretty positive with Mapletree Commercial TRUST. Let's look at this over here, this summary table. You realize that full year MBC2 has now been factored in. This has grown that contribution from MBC2 from $30.2 million to $70.6. That's just a recognition timing thing. But I think moving forward, MBC2 is really going to pick up and diversify the income stream for Mapletree Commercial TRUST. The drop for Vivocity has been bad, but maybe the worst has been over already. The drop has been from $158.7 million in terms of net property income to $125.6 million. So Vivocity does contribute about 40% of net property income. And over here, let me show you the percentage drop in terms of performance. The yellow line is tenant sales and the blue line is shopper traffic. I go to Vivocity almost every week and I'm a bit surprised to see that shopper traffic is only about 60% as what it used to be. Maybe last time it was even more crowded, but it doesn't feel so. It really still feels packed when I go to Vivocity. But the main part is actually tenant sales. You see that tenant sales has more or less recovered. They are hovering close to 90% in terms of tenant sales recovery. While the footfall has been poor, tenant sales has been good. Maybe there's a lot of e-commerce sales. Maybe NTUC FairPrice is doing very well, or maybe simply some of the refurbishing work in the mall has been completed and that's why the sales have been bumped up already. So now let's look at some other segments contributing Mapletree Commercial TRUST, because today's breakdown is really to see its latest figures. How is recovery looking like? Give you actual numbers if you want to be an investor with Mapletree Commercial TRUST. The one which I'd like to pick up for discussion is actually M Tower. And you realize in financial 2019-2020, it contributed 37.6 million to net property income, but that amount has dropped by about 8 million, 8.2 million to be exact. And the key part that is quite glaring is why is it called M Tower? Previously it was called PSA building, correct? And they've also mentioned that a major tenant has moved out, and I think it's quite obvious now it's actually PSA because they've changed the name of things. Now it's M Tower. But the good part is they have been recovering some of the empty spaces. They have been leasing out to someone new. This number here is the committed occupancy for M Tower has inched up again to 91.7%. In December 2020, that number was 88.4%. So a few more percentage increment, which is good news. Let's move on next to understanding Mapletree Commercial Trust's numbers. The key part to know is weighted average all-in cost for debt has dropped significantly. You realize previously it's 2.94%, now it's 2.48%. So quite a lot of savings. And the key part is the gearing ratio is only at 33.9%. Now you know for REITs, they can gear up to 50%, which means Mapletree Commercial Trust potentially can do property acquisition. They have a lot of room to do so, which is good. So hopefully they take advantage of low interest costs, look for properties that are accretive, and hopefully increase the dividends per unit. This is a well-run REIT, something I've mentioned before on this channel. So if you're an investor, this tutorial catches you well, helps you understand latest performances. And again, it's taken our team hours to produce this, so smash our like button so that more people can see valuable content like this also. And with that, let's move on to Suntec's latest performances. Now I've covered before on Suntec REIT, which I'll leave links below and towards the end of the video. So if you haven't seen that tutorial, check it out because it will help you understand. Suntec REIT is one of Singapore's biggest REITs also. But it's also slightly different from Mapletree Commercial Trust. Let me pull this diagram up for you to see. What do you realize? You see that offices are almost 80% of net property income, correct? And joint venture income. They have a bit of joint ventures, a bit different from Mapletree Commercial Trust. Mapletree Commercial Trust owns business parks, good business parks. They own some offices like M Tower, like Anson Building, and then they also have Vivocity, which is 40%. But for Suntec, retail is only 20%. And the surprising part is Suntec has been building up a lot of overseas assets. As of now, Australia is 29% rate, so almost a third in terms of contribution. So that actually impacts this following diagram, which you should understand if you want to be an investor in Suntec REIT. There's a few key parts I'll highlight. You realize that office income in total has actually jumped 29.9%. That's almost 30%. So what are the contributing factors? Let me highlight a few. Firstly, 477 Collins now is contributing $5.8 million. 21 Harry Street is now contributing $2.7 million. And 9 Penang Road, which is opposite Plaza Singapura, is now contributing $1.8 million. So there's a lot of offices that's now fully ready, rented out. And then the additional kicker is strong Australian dollar. They've mentioned in a few key parts for 177 Pacific Highway and 55 Curry Street. I don't know if you've seen recent performance for Australian dollar. No, I haven't tracked Australian dollar for quite a while, and I was quite surprised because after seeing that, I went to dig up the charts. Let me pull it off for you see. You realize that Australian dollar has surged tremendously, correct? Ever since the worst part of COVID-19, which is March last year, it has increased by 20%. Previously trading, it was small as Sing dollar again, but right now it's again bigger than Sing dollar. Wow, so Australian dollar has really that volatility. And I've actually read a bit on Suntec's reports. They actually do hedge that income to Sing dollar. So the full appreciation of Australian dollar is not felt. That's something that you should take note of also. But at the end of the day, the property is still in Australia. It's still valued in Aussie dollar, which means it's good if Australian dollar strengthens. The key part that we need to track is also the occupancy, and I have something to show you. This chart over here shows a few key parts. The first is that 21 Harry Street is still pretty empty, 69.9%, but in total, you realize that Suntec's Australian properties are doing better than average. They have recently bought something in London, which is Nova, and that's also been doing quite well. But back to the point of 21 Harry Street, you realize that previous quarter, it was only 68.7%. So they are filling up that space. Not too bad. And at the bottom, you also realize that there's rent guarantee. I want to dig up a bit also. There is rent guarantee for these three properties. 55 Curie Street, 21 Harry Street, 477 Collins Street. They are protected by rent guarantee. I guess that was imputed at the point of purchase, but also when there's rent guarantee, it will also expire, correct? Which means that number may fall off after a while. I don't know details of it. Or if you're a Suntec investor, you have something to share, leave it in the comment sections. Everybody can learn a thing or two. But for Suntec REIT, I have something to show you also that is probably on the more negative side. This is the underperformance for its retail as well as its convention. Let me pull out for you to see. You realize that compared to a year ago, retail has lost further revenue. And this has been seen throughout Suntec City, Marina Bay Link, as well as Southgate Retail. So all have been losing. Suntec's malls are all in the heartland. Later towards the end of the video, I'll be sharing with you an alternative which invests into the neighborhood malls. But Suntec malls are all in the city center, which means if there is work from home arrangements, then there's less footfall and definitely less performance. And the other part is Suntec Convention has lost even more money as of first quarter 2021, $2.5 million for that quarter. So if you analyze it, it could be a 10 million loss. And convention centers are not bouncing back anytime soon. It feels like that. We've been on and off with travel bubbles and stuff, but I think convention centers might need a longer runway to recovery. But back to Suntec City Mall, the lease expiry is pretty bleak. That is my first glance at things. This year, 2021, you see that there's quite a bit of vacancy coming up again. Next year and the following year, there's even more expiring leases. So I don't know how much they are able to keep occupancy high. Because when I do go to Suntec Mall, there are empty spaces. That's something I can share. And I've actually seen this company, Super Park, and they vacated that place. So news has also came out that there's a new ownership and stuff. So hopefully business back to usual, because that playground takes a lot of square feet away from Suntec. So back to tenant sales, something that's important to measure also. Suntec City Mall has seen close to 100% in terms of recovery, which is surprising, considering that a lot of office ladies, working crowd are still working from home. They are back to close to 100%. I think that's a positive to take away. But for Suntec REIT, they are a bit different in terms of risk profile. In terms of all-in finance costs, it's 2.4%, similar to Mapletree. But the leverage ratio right now is already at 44.4%. Again, the cap is 50%, which means they may find it difficult to purchase more properties, or they have to raise rights. They have to take on some preferred equity and stuff to buy new properties. So they're kind of at their cap already, which is a bit different from Mapletree Commercial Trust. Now, since you stayed here, inviting you to press and subscribe, join our family, become more financially savvy. I have actually 2 bonus points as food for thought for you. The first is that you should be aware that many big banks who own MBFC floor space, who own Suntec space, who owns Harbourfront Tower space, they are all looking to downsize because a lot of work from home has proven that backend staff can actually do their work as per normal from home. And then one report is like this: Standard Chartered Bank looking to downsize, give up floor space in MBFC Tower 1. Now, Suntec actually has a joint venture that owns ownership of that, which means they could see a suffer in terms of rental income from office space. That's the bad side, but on the good side, let me highlight a key part. If you look on the ground level, what's really happening, you realize that people are still in neighborhood malls a lot, working from home quite a bit, and not going down to town too much. That's why today's 2 highlights, Suntec Mall as well as Vivocity Mall, are still not past their 100% in terms of their sales. But one company is actually shown where they own a lot of local heartland malls, Fraser TRUST. You'd see that they are actually better than before. 1 year ago, they did not clock so much sales as of now. And this trend, in my opinion, would reverse simply because people start to move back from homes into the office space. As we've seen before, the mega trend is actually people, 75% of staff can now return back to office as of April 5th. Working from home is no longer default mode. So it is my interpretation that Fraser TRUST, their malls would lose some of its edge back to those that are in city centers. So these 2 include Suntec REIT as well as Mapletree Commercial Trust. So with that, let me ask you this question. So between the 2, which is your preferred? I'm quite clear on mine, and it is actually Mapletree Commercial Trust. Suntec REIT has its edge. It's fantastic in office space. I've actually done a full tutorial on it before. So if you want to find out a bit better first, then look for that tutorial which covers Suntec REIT in detail, especially with some of these insider purchases and where it's been developing its asset purchases. With that, I'll sign off, inviting you there, and I'll see you in that tutorial also. Take care and goodbye.